Hey, welcome everybody to the 40 Finance channel. Today I'm going to do sort of an odd comparison, and that is for Corsair gaming stock versus Palantir. And I've chosen each one of these stocks for a different reason. Number one, on the Corsair side, this is a stock that nearly every live stream that I do, somebody asks about it, knowing that I do value fundamentals in a stock, and Corsair has pretty good fundamentals from a valuation perspective. So I get a lot of questions about Corsair, so I want to loop that one in here because it's a stock that I do not own. Then on the flip side, we have Palantir, which is a stock that I do own. And I don't get a lot of questions about Palantir. And quite honestly, it's a stock, when you look at it from a valuation perspective, I would probably be one of the first people to say that it is slightly overvalued on where it sits today. So I'm going to talk about why do I own Palantir versus a stock like Corsair, because they almost feel like opposites that I would buy into. So I'm just going to explain that and use it as a comparison, and maybe it'll help you think about stocks that you might buy down the road. Reminder as always that my stock picks and projections are just my opinion for your entertainment. Please make sure you do your own research. However, if you like comparisons like this, stock market analysis, all kinds of fun things, please give the video a like, subscribe to the channel. Thank you to everybody for your support. All right, first of all, if you're not familiar with Corsair, this is the type of stuff that they sell. Gaming boards, keyboards that light up, headsets, etc. They also have streaming gear, and additionally, they sell PC components like cooling fans and whatnot. And I was interested to see they also offer gaming PCs. So that could be a very interesting segment if they can develop their own gaming PCs from a brand standpoint. And they also have software to help power some of the components that they sell across the board. So that's what Corsair is into. Now, on the Palantir side, if you're not familiar with Palantir, their products, we build data fusion platforms for integrating, managing, and securing any kind of data at massive scale. And then we layer in applications for interactive, human-driven, machine-assisted analysis. They basically help government agencies as well as B2B customers analyze huge sets of data and streamline those data points into a singular platform where they can not only be secured but also analyzed across different platforms. So obviously in the era of big data, there's a lot of potential for companies like Palantir. I would say Palantir's biggest calling card right now is the work that they have done and are doing for the government, U.S. government and defense systems, as well as international health organizations. These companies have all tapped into Palantir's knowledge base. And I think for me, the future is even brighter when you factor in sort of the B2B business, enterprise type applications that can be brought into large corporations with large data sets. All right, Corsair stock today sits just under $30. You have a PE trailing 12 months of 1861. This is a profitable company at $1.59 EPS in the trailing 12 months. And you see the one-year chart over to the side. It looks like perhaps this IPO'd at $17.25 back in September of 2020. Today you're at $29.35. Quick eyeball of the income statement, balance sheet, almost $2 billion in sales over the trailing 12 months. You have $121 million in cash, $300 million in debt. So not a big concern there. On the short percentage, with this one, it gets a little interesting because you're at 21%. That's enough to show up on some trending stocks that are highly shorted. All right, on the Palantir side, we have a company today at $22.50. This company is not profitable yet, so you have a negative EPS. And from a one-year chart perspective, looks like it started in October, about $10 or so. I can't remember if it was a SPAC or not, but it has since risen to a high in January of 35 when the stock market was flying high, and currently sits at $22, where it's basically been riding for most of the year. All right, on the Palantir side, in terms of balance sheet, $1.2 billion in the past 12 months as far as revenue, total cash of $2.34 billion, and total debt of $452 million. So very similar. I would say Palantir obviously has a ton more cash than Corsair does, but these numbers aren't too different from each other. The one obvious difference, probably the short percentage of float for Palantir sits under 4% at 3.81%. All right, so if you watch the channel a lot, you know that between those two stocks, if they didn't have names on them, I would probably pick Corsair, if anything else, just because it has a positive EPS, and we didn't look at it, but I could tell you that it is supposed to have growing revenues and growing earnings over the next few years. So with that being said, why would I try to pitch Palantir versus Corsair right here? Well, there's two big things that come into play, and we'll compare the numbers here in a minute. The two big things for me as an individual investor is, number one, I've already owned a stock called Turtle Beach, ticker symbol here, HEAR. I sold it for about 100% profit near the fall of last year, something like that. I think my cost basis was $7, $8, $9, and I sold it for $20, $21. I think it's all the way up into the 30s now. So I have owned a stock that has been in this kind of computer peripherals world. And I've watched it through the Fortnite booms, and I watched it through the COVID booms as gaming has really taken off. And there's no doubt that gaming is a huge growing industry. But there's one thing that always stood out for me on Turtle Beach after I had invested in it, and that is I just think the moat for peripherals is slim to zero. There's nothing that really stops anyone from making headphones, lighted keyboards, stuff like that. And as a good example, Turtle Beach actually purchased a keyboard company out of Germany. The name escapes me. And so now Turtle Beach, which only did headphones, now they sell those lighted keyboards as well. I will say that Corsair makes significantly more revenue than Turtle Beach. Turtle Beach is about $500 million a year in revenue. Corsair is in the $2 billion range. It looks like their suite of products is much larger. But again, for me, from like a moat and competition and how different is this company compared to, say, Logitech, it just doesn't stand out to me that they're doing anything remarkably different. Now, to be fair about that comment, I'm not a gamer, so for all I know, Corsair's brand, similar to what Turtle Beach was doing with headphones, maybe Corsair's brand is setting the world on fire. I have no idea, but the fact remains that peripherals, in my opinion, is a crowded market with very low barriers to entry. And with that in mind, stack it against Palantir, arguably overvalued stock. Lots of questions about share dilution, lots of questions about insider selling of shares for stock compensation. But at the end of the day, the upside for Palantir and the moat for Palantir, I would argue, is extraordinarily larger than Corsair. In my personal opinion, is that Palantir has the technology and the moat and the secret sauce to sort of take the foundation that they've laid today and grow it, massively over the next 5 to 10 years. So in both cases with these stocks, I think there are ROI opportunities. I think the ROI opportunity for Palantir over Corsair gets bigger after year 2, 3, 4, 5 from where we are today. All right, let's take a look at analyst projections for Corsair here over the next few years. I like to use the table view. It's just simply easier to read. We got fiscal period of 2021, 2022, and 2023. Each of those 3 years has at least 7 or 8 analysts, so we'll just stop at that point. From an EPS perspective for Corsair, you see double-digit growth in EPS, which is fantastic. $1.81 to a projected $2.01 to a projected $2.24. And as I tell you guys all the time, these far out projections, if you will, have a tendency to go up for good companies. So I'm just going to assume that Corsair's in that group. But for the sake of argument, we're just going to say double-digit year-over-year growth in earnings per share. So your forward PE does inch down as the years go on. And of course, if they added new companies or were acquired or something like that, this whole situation would change for both stocks. Now let's go down to the revenue side. So again, fiscal period 21, 22, 23, that's the last level of support that we have from multiple analysts. And this year looks fantastic, plus 21%, over $2 billion in revenue. And then you sort of hit a wall of single-digit growth. I know that this says plus 30% in 2024. Frankly, I wouldn't count on anyone projecting accurately that far out. And don't forget that we only have one analyst chiming in that, so we don't get the advantage of an average. But we go from 21% to slowing growth the next 2 years after into 2023. All right, same exercise on Palantir. This is EPS, December of 2021, effectively the fiscal year. If everything hits for them, they'll make 15 cents per share in 2021. That is actually negative growth. And most of the reason for the negative side is because they had some last minute return on investments last year that padded their EPS. So they are going down from an EPS standpoint, but I would just tell you that this is actually more of a relevant EPS compared to last year with regard to normal business operations. EPS in 2022 barely ticks up at 21 cents. However, that's a 43% growth. 2023, you're barely up to 28 cents, 35% growth. Again, as the years go on, you start to lose any sort of sample size for Palantir. And I would just say that 2023 for Palantir, to be super fair, is almost unpredictable where this company is going to go, just in terms of some of the technological advances they're making. But regardless if they land at 15 cents, 20 cents, or 30 cents, there is no mistaking that Palantir's forward PE numbers are much, much higher than Corsair's. All right, let's take a look at revenue, which is probably more appropriate for a company like Palantir. Got $1.5 billion basically for this year. That's a growth of 35%. Forward price to sales at 28 from that point. 2022, you inch closer to $2 billion. That would be plus 30%. 2023, you add another 30%. And this 25 to 30% growth in revenue is essentially what Palantir has guided for the next several years. If you go into their earnings report, they've basically said that publicly. So granted, by 2023, forward price to sales of 17 still isn't the most spectacular price to sales ratio you're going to find, especially if you have to wait 2 years to get there. But my take on Palantir is that they will actually exceed these numbers, much like they have been doing for their first few quarters on the stock market. All right, taking a look at TipRanks to see what the best performing analysts think of these stocks. This is Corsair. We scroll down. We did get one update yesterday, buy signal at $55. That would be an 86% upside from today. and that's a projection for over the next 12 months. Now, 3 to 6 months ago, you had very similar projections. Everyone's a buy, plus 60% or more back when those calls originated. All right, on the flip side, we have Palantir, and it's a much different story on Palantir. Granted, we don't really have any fresh updates. These are all 3 months ago. And you've got sells. Sell at 17, sell at 19. Couple holds. And way back when, 3 months ago, you had a couple buys, $28, $30. All right, so if you go by TipRanks analysts anyway, I'm probably making a big mistake here, right? Palantir doesn't have a lot of life in it from the analyst standpoint. Corsair, on the other hand, is plus 60% over the next 12 months. So there's a lot of opportunity, at least on paper, for Corsair to steamroll Palantir over the next year or so. At least that's what it looks like. And to be honest, that wouldn't surprise me. Over the next 12 to 24 months, I think the stats that we just looked at and some of the analyst feedback, it looks like Corsair would have a solid to maybe great chance of outperforming Palantir in the next 12 to 24 months. However, for myself, I'm going to pass on that Corsair opportunity that looks pretty decent, and I'm going to stick with Palantir, and the number one reason why is because I believe that Palantir is going to outperform over the next 3 to 5 years and potentially become a much bigger company than many of the analysts project. Now, that's sort of a pie-in-the-sky statement that I don't normally make, but as I read through the materials with Palantir before I bought their stock, as I followed up on all of their earnings calls, there is just this momentum with this company, and it's not always just about sales. It's about the way they're gaining connections into some of the most important databases in all of the world. That's a place where I want to be. And I think in the long term, Palantir actually sets up a very defensible moat, because switching costs and trying to navigate without Palantir in these big companies is going to be nearly impossible for them. So like all good software stocks, the compounding returns will eventually lead to big things. Keep in mind too, with companies like Palantir that are in the technology segment, you have a much higher trading valuation than you do with a consumer products company like Corsair, right? Corsair, no matter how good they do, is always going to be held back by consumer PE ratios in the range of 15 to 20. And while those sound really good if you compare them to NVIDIA, the fact of the matter is that in the technology space, because of the opportunity for disruption and the opportunity for reoccurring revenues, stocks just trade at a higher valuation. So because I do believe that Palantir is going to do big things, and I know that valuations in the tech side can get way out of control sometimes, I think I have a better than not chance of making decent money with Palantir. It's just going to take 5, maybe even 10 years, at least with the information we know today. So it really just depends on the kind of investor that you are. If you're looking for a quick plus 50%, plus 60%, it looks to me like Corsair's the better opportunity. I will say the caveat could be that Palantir comes out with something we didn't know was going to happen, or a contract gets signed that we didn't know was going to get signed, and the fortunes of their stock could change. Now, if you flip over to the long game, which is where I typically play, I think that Palantir's prospects for 10xing are significantly higher than Corsair. I don't see a Corsair 10x anywhere on the roadmap, and I'll be the first to admit that Palantir, it's probably not on their roadmap either, but if you had to say which company could 10x between the two of them, I think all the momentum's on the Palantir side. All right, guys, so that's just a sort of a fun exercise. Again, I get a lot of questions about Corsair. There's nothing wrong with it. It's not for me. I've sat in the here Turtle Beach stock for a long time waiting for it to rebound. I'm not going to get stuck in Corsair, but I hope for everyone who owns it, that stock does awesome. On the flip side, with Palantir, not really the normal kind of stock that I buy at all without any sort of like really strong fundamental valuations. It's kind of a wing and a prayer, and that's where you just have to do your research and figure out, do you believe in what the company's doing? Do you believe in the segment? And in the case with Palantir, it checked off all the boxes for me. All right, guys, let me know what you think of Corsair versus Palantir in the comments. Thank you very much for watching. We'll see you on the next one.